Dear class, today let us continue with our discussion on our branch accounts. And this is on number 3, accounting record and branch. To show this branch account will allow us to show the transaction at the branch of an organization. Normally we have two methods. One is where the head office keep all the accounting records, and the second when each branch has its own full accounting system. So when the head office keeps all the accounting record, we regard it as a centralized system. But again, decentralized when each branch has its own full accounting system. It is easier to understand accounting for branch if these two main methods are dealt with. If the head office maintains all the ledger, that is a centralized system. The ledger are used for three main purposes. One is to record transactions showing changes in assets, liabilities, and the capital. But again, is to ascertain the profitability of each branch if possible. And number 3 is to check whether goods or cash at a branch is misappropriated. So the third purpose is very important for the firm with many branches handling a large amount of stock of goods. And if possible, if they are situated in a distance away from the head office. So, method for checking a stock and a cash. The firm with a few branches, but again they are selling very expensive items such as motor vehicle or car. It would be easier to check on purchase and the sale of these items such as car. The number of cars sold will not be very great, so therefore checking that car or money have not been stolen will be an easy task. However, if a firm such as store with the branches selling many thousands of cheap items would not be checked so easily. So to keep a check on each carton of salt, bag of flour sold would be almost impossible. Even if it could be done, such checking would cost too much. So the accounting answer to this problem is to record all transactions at the branch in terms of their selling prices. So then for each accounting period, it should be possible to check whether the closing stock is as it should be. For instance, for a small branch, when given the following figures, stock on the 1st January at a selling price, and goods sent to branch by the head office at a selling price, then sales by the branch at the selling price also is 18 million. So the calculation of a closing stock would become very easy, because we are taking opening stock at January at a selling price, which is 5 million. We add goods sent to the branch at a selling price, also 20 million. So good available for sale at a branch, the selling price will be 25 million. But again, we have lost goods sold at a selling price, which is 18 million. So closing stock at the 1st January should therefore be at a selling price, which is 7 million. So if there is a good remaining, which does not concur with these 7 million, then we will look that there is a misappropriation of stock. But again, we have allowances for deficiencies. In every business, there will be a wastage of good for some reason. It might be good may be damaged or broken, or they may be kept too long or somehow wasted away, or the good may be stolen by customer, especially in a retail business, or theft by employee. So no one can be certain how much stock is wasted or stolen during a period unless there is the experience of doing such business. It's where you can estimate the losses and establish percent of normal loss. The head office typically, we have a double column system. So the head office normally typically draft a trading and profit and loss account for each branch at least once a year, ensuring computerized accounting for branches. So the trading account displays goods sent to the branch or in stock at a costly price, providing the normal basis for any business. So the column displays trading account item at a selling price, comparing deficiencies to normal deficiencies. It is memorandum column for control purpose, not part of a double entry recording. So a well-established system allows the head office to monitor the performance of branch while also enable the branch to evaluate its operation against the company. For instance, if we have this example, XYZ is a business which sells goods at a uniform markup price. So when we are saying markup, selling to arrive at a selling price, they take a costing of good, they add that margin markup of 33.5% on the costing price. So the stock January at a cost is 1,200,000. Goods sent to branch during the year at a cost, goods sent were 6 million. Sales at a selling price is a 7,428,000. Stock at a cost is a 1,500,000. Expenses 1 million. Allowance for wastage the 1% of sale, as the actual deficiencies is 172,000. So this method is suitable where all the sales are for cash. There being no sales on credit or where debtor make their payment to the branch where sale took place. So if the sales are for cash, so in such case, we have a memorandum, and this memorandum has two columns. The one column is for selling price, and the other column is for cost. So it's like a branch trading and a profit and loss account for the year ended the 31st December 2023. We have a debit side and a credit side. On the debit side, we have these two columns, a column for selling price and a column for cost, and likewise we have also a column for credit side. We have a column for selling price and cost, and this column for selling price indicate if there is a deficiency, then this column will show up the difference. But again, the other column, which is for cost, because we have a cost and a sales price, this will give us whether we make a profit or loss through this branch. So if we take a stock at the first January opening stock, 1,600,000 selling price. Its cost is 1,200,000. So if we take 1,200,000, that is a cost, and we want its selling price. Its selling price, we times 33 and the 1/3%. So we add up 1/3 of cost, then it will be 1,600. Goods sent from a branch was 6 million. If you take at a cost and its selling price, if you take 1/3 times cost and then you add up to get a selling price, will be 8 million. So good available for sale at a selling price 9,600,000, and the cost price will be 7,200,000. So less closing stock, which is 1,000. The cost is 1,500,000. If you change it to a selling price, it will be 2 million. Then cost of goods sold it is the 7,600,000 as selling price, but at the cost one is 5,700,000. So as you can see, within our selling price, we have a sales, which is actual sales, which is 7,428,000. But again, we have a normal loss. A normal loss, we have been told that it is a 1% of sales. So 1% of sales, it becomes 74,280. But if you make a comparison with the cost of goods sold, cost of goods sold at a selling price should have been 7,600,000. Again, there is an abnormal loss of 97,720. That need investigations. Why this? Because as a normal, we would expect only 1% normal loss, which is equivalent to 74, but we have more than that. So what would be the reason? So again, on the other part of the costing, give us a profit. You take a costing with the cost of those goods, and then we have to establish a gross profit, then gross profit brought down with the expenses to establish for a net profit. So net profit that is to be transferred to the head office. So this is how, but again, we have the stock and the data system. That were a memorandum where we took a two column, one for selling price and the other for costing, so that we can establish the profit. But again, we have the stock and the data system. So by stock and the data system, we adjustments are needed when there is a credit sale as well as a cash sales. There's two ways of making the entries. We may use a memorandum column only to keep a check on stock. This is when we are employing the stock and the data system. We may use a memorandum column only to keep a check on stock. But number two, we may use integrating stock control into the double entry system. And this is often called the integrated system. And about this approach, information is kept relating to stock and the data. Let's use Exhibit 2 to show. Exhibit 2 show the record in the head office book when the memorandum method is used. A branch sale, all it is good at a uniform markup of 50% on the costing price. So the costing price, they add 50% to arrive at the selling price. Credit customer are to pay the account direct to the head office. And remember, this is we are continuing with the centralized, where the head office keep all the books of account. So on the first day, as opening stock, we have the cost 2 million, data 400,000. So during the period, we sent to branch 7 million, sales 6 million, sales credit, sales cash 6 million, sales credit 4,800,000. Cash remitted by data to head office 4,500,000. At the close of the last day, closing stock, we have a stock at costing 1,800,000, debtors 700. So by memorandum, we may use a branch stock account. So branch stock account has also a two column. One column for selling price and the other column for cost. So we take, as usual, opening stock. We have a 2 million, but we add that 50% markup so that we arrive at a selling price, which is a 3 million. Good from head office is a 7, but if you add 50%, yeah, selling price, so good sent it to branch or received it from head office is 10,500,000. So good for sale, available for sale, opening stock plus good from head office or headquarter. So at the selling price of 13,500,000, at the cost is a 9 million. So let's closing stock. Closing stock is 1,800,000 at the cost. So if you change it to selling price, it will be 2,700,000. So cost of goods sold, if you take goods available for sale, and then you deduct the closing stock. Cost of goods sold is 10,800,000, and it is 7,200,000. So the selling price sales are the same, that cash sales is 6 million, credit sales 400. So that gives us 10,800,000 for both selling price are equal. So if we make a comparison between selling price and the selling price, debit selling price, the credit selling price, so we see that there is no loss. We sent item for selling price, we expect that a good sold is the 10,800,000, and the same exactly is what is obtained from that branch. Therefore, the column for cost gives us a profit made or gross profit made by branch. So by good sent to branch account, so we credit good sent 7 million, and branch stock, we debit branch stock account for 7 million. And therefore, this one item is to be transferred to headquarter trading or profit and loss statement. But again, debt account is an easy. We have the opening balance of 400,000, and then we make branch stock sales on credit. Branch stock 4 and 8 million. So in the transfer to headquarter, we have cash of 4,500,000 that we are transferred to headquarter. So we have a balances of 700,000. So the cash, also cash account, we have a branch stock, cash sales of 6 million, and the branch data also brought a cash of 500,000. So that's how we need to show that. But again, we have an integrated system. Integrated system introduce the idea that the gross profit can be calculated by reference to profit margin. So it introduces the introduction of a gross profit. Despite of matching all on a branch stock account, keeping a column for selling price and a column for actual costing, so we may have a separate profit margin. So in this case, a selling price, a branch stock account will be kept at a selling price, opening stock. So this would what give us an opening stock 300,000, cash sales, credit sales, goods sent for head office. But up from branch stock account, which is prepared at a selling price as usually we have seen earlier, this won't give us this. The aim of this branch stock will give us a discrepancies, and this discrepancies, that whether there is a good stolen or whatever, misappropriation of cash or goods. But again, there will, in an integrated, we will introduce the branch adjustment account. And this branch adjustment account will be taking care of profit loaded to goods sent. So we have unrealized the profit of 1 million, the profit loaded in this opening stock. So we have unrealized profit brought down that were corresponding to opening stock at a branch. Remember that the stock were 2 million, but those goods are sent with 50%, half of 50% of the profit margin. So unrealized profit for those opening stock were 1 million. But again, on a good sent to branch, they were 7 million goods sent, but the profit loaded were 7 million, but the profit loaded also in a branch stock for goods sent were 3,500,000. So again, on the closing stock also has the closing stock has also the profit margin of 900,000. So this gives us the same 3,600,000, the profit made by branch. So in this case, the profit made by branch will be shown by branch adjustment account or branch markup account. So this branch markup or branch adjustment account will be taking care of the profit loaded. So you start with the realized profit brought down. This is corresponding to closing stock, and then 3,500,000 corresponds to goods sent to branch during the year. But again, unrealized profit corresponds to closing stock of them. So the difference become a profit made by branch has to be taken care or taken to head office. Again, we have a data account, but it will be the same. Opening balance of data, branch stock, and the same. Cash received from data, and the balance kept down will be the same. Goods sent to branch will be the same and maintained at a cost. So branch stock we have sent is 7 million, and this would be transferred to headquarter income statement. Again, we have cash account will be what will be. So that's mark the end of our presentation.